So I've been trading for 6 years now at this point, 2024, 6 years. And in that time I've spent over $10,000 in total on prop firm valuations, prop firm funded accounts, whatever you want to call it. And that's both in the Forex and futures space. And that's $10,000 NZ, roughly 6,000 US dollars, depending on the exchange rate right now. And I basically started using prop firms way before I had any business doing so. I did it way too early. But I'll talk about that a bit later in the video as my reasoning behind that. But in this video, I want to talk about everything I've learned so far about prop firms, and with the amount of money I've spent, the amount of time I've spent using these prop firms, I'll share with you some important learnings from my experience so far. So we'll go through, are prop firms worth it versus personal capital, my thoughts on that, how to pass/get funded most efficiently, how to keep an account once funded, how to choose a good and trustworthy prop firm that'll actually pay you out and be a good long-term choice, and then lastly, a little, I don't want to say secret, but a little looked over tip that a lot of people miss when choosing which prop firm account size to select, and how you can use that to your edge as well. Before we get into each segment there, that $10,000 might sound like a lot of money to some of you it might not sound so much. Keep in mind, every person's trading journey is a little different, and the value of money is also relatively different depending on where you live, how you make your living, etc, etc. So clear that out the way first, because when I posted this post up, there's some people like, you shouldn't be sharing this, bro, this makes you look bad. You know, I've only spent $2,000 and I got funded and such and such. Honestly, doesn't even matter if you've spent a decent amount on prop firms. The main thing you should be looking at is, are you improving? Are you pulling money out? And what's been your return on investment so far? Well, I've spent $10,000 on prop firms over the last 6 years. I've well out earned that from payouts across the years and from gains in my own personal trading accounts as well. So that $10,000 spent on the prop firms and that learning experience has been money well invested for me. So just keep an eye on your return on investment, but the actual dollar amount itself doesn't indicate anything unless you're purely just gambling that money away and not getting anywhere. So let's get into it, guys. So firstly, are prop firms worth it versus personal capital? Which one's better? What's the pros and cons? This is my experience so far. So I started out, when I started trading near the end of 2018, I had no idea what prop firms were. They weren't really that big in 2018, and I was trading Forex. I was trading my own funds, trading Forex, spot Forex, CFDs, and because of the insane amount of leverage that you had back then on the Forex brokers, you could put in a small amount of money. I had like just a few hundred in my account, and you were able to actually make decent amounts with personal money because of that high leverage. Also meant, of course, you could blow your capital really easily as well. So in those early days, I spent very little time trading in demo. I basically went straight into live just with small amounts of money because I found that for myself, trading a demo account was ineffective. Once I learned the basics of how the systems worked, how to execute trades, how to read the charts, how to read and measure pips and points and ticks and all these things, trading demo was doing nothing for me. There's no skin in the game. Psychologically, it wasn't working. I had a little bit of cash to spare to play around with and trade with, so I'd put real money in there, just small amounts at a time, $50 to $100 back in the day, and I would either blow the account or make some money and learn some things, right? So I'd spent very little time in demo. So it got to a point where I was looking at the money I was spending on my own personal funds. It was going out the window week after week, just blowing these accounts because I didn't know what I was doing. That I had to sit down and reevaluate things, right? And I stumbled across prop firms. At the time, I think it was FTMO was the first one I looked at. I don't use them, nor do I trade Forex CFDs anymore since I moved to trading futures, but they were the first one I came across. For me, it was a decent compromise between both demo and live funds. I could pay a relatively small amount of cash to trade demo, but because there's something on the line, I've spent a little bit of money to get the account and I've got a target to meet. And if I meet that target, I can get funded with, $50,000 or whatever and make even better returns off my money. So for me in the early days, using prop firms was a good way to, even while I was learning, this again is personal experience, personal opinion, even while I was learning, using prop firms at the time was a good way for me to have something on the line, have some skin in the game so that I'd actually trade seriously, and it would give me the potential for a reward as well. For me, that was a better alternative than trading demo. That was me in the beginning, right? But fast forward now, 6 years later, now I consider myself a profitable trader. I'm decently consistent, confident in my trading. I know what I'm doing. I still have some bad days, but I know what I'm doing for the most part. So what are my thoughts now as a profitable trader versus a new trader in using prop firms instead of personal capital? My opinion is use both, right? Because think about it this way, right? You can have a personal account, say a $10,000 personal futures trading account. First of all, you had to put in $10,000 to begin with, right? You had to have $10,000 to spare and put inside that personal account to trade with. right? So it's hurdle number one, you've got to have 10K. Number two, all of that money is at risk. All of your hard-earned $10,000 is at risk. There's no limits to stop you from trading for the day. There's no drawdown limits, nothing like that. This is a good and a bad thing, but ultimately that 10K you've put in a personal broker is at higher risk than what you'd be doing with a prop firm. But of course, there are positives and negatives to that. So that personal account, that personal 10K, yes, it has higher risk, but there's also higher reward, higher return. There's no limits on how much money you can make in a day, how much you can lose in a day. There's no rules around how you should trade. You can trade that however you like, continue to grow it upwards and upwards and upwards, no problem, right? So that's the benefit of a personal account. But if you are profitable with personal money as well, and you want a low risk but high potential return on investment on your money, you business guys will understand this. Let's take a Top Step account, for example. A Top Step 50K account that's 50K buying power. Your max drawdown is 2,000. So the max you can lose on the account from the very beginning is negative 2,000. Of course, you can build that up as you build the account up once you're funded, but at the very beginning, you start with a $2,000 max loss limit on a Top Step 50K account. So the true account size is $2,000. And how much have you paid for access to that? You've paid $49 per month. So you pay $49 to have access to 50K buying power and $2,000 of drawdown. So you've basically paid $49 to get $2,000 in return to trade with. And if you're already a good trader and you have no problem getting funded, once you're funded, you pay that activation fee of $149. So now your total money spent is $200. You now are funded and you have access to $2,000 worth of drawdown. So you've paid $200 to access $2,000. You get a 10x return on investment. If you're a profitable trader and you know what you're doing, you've paid $200 altogether. Now you have a $2,000 trading account. The best part is if you lose that $2,000, you haven't lost $2,000. You lost $200 of your own money. So business-wise, it makes sense to trade both. Okay, have your personal account, grow that personal account, trade that how you like. If you are a profitable trader, make use of these prop firms. It's free money, basically free money. You pay $200, you trade that Top Step account once funded and you grow it, you grow it, you grow it, you grow it. That basically becomes the equivalent of a personal account anyway, because with Top Step, when you grow your funded account, your live funded account, you can build that drawdown cushion to whatever you like, build that account size to whatever you like. According to Top Step's payout policy, you can take payouts, all right? So you're making a return on your money that far outweighs the amount or the dollars that you've spent. So it's a no-brainer, boys and girls. If you are a good trader, a profitable trader, or even just a decent trader, make use of prop firms. The return on investment makes total sense if you're a good trader. If you're a bad trader, it doesn't make sense at all. You should probably avoid them unless you're like me and you need skin in the game. But once you're decent, it's free money. Make use of it. Now, how to pass/get funded efficiently. There's two ways that I think of this, right? And there's one way how I used to trade when I didn't have so much money, and there's one way now how I trade them when I do have disposable income. The first way, obviously, if you're newer, the best way to pass and get funded with prop firm accounts or with evaluations is to trade it or treat it like you would with real money. So imagine, again, using that Top Step 50K account size as an example, you pay for a Top Step 50K evaluation/combine. You have now a max loss limit of $2,000, okay? What I like to do is I like to give myself a loss limit on the day based off that max drawdown. So we have $2,000 max drawdown, right? So if you're gonna trade it conservatively for a funded account, say if you were to risk a maximum of $200 per day, right? You can't lose any more than $200 on a day. Set that rule for yourself. That means you'd have to have 10 losing days in a row before you blow the challenge. And then your profit target is $3,000. So break it up like that. Mentally think, how many days in a row would I have to lose to blow this challenge, and adjust accordingly. That way you give yourself the best chance at passing and getting your value's worth for your money that you've paid to sit this challenge, sit this evaluation. Think about what your losing days look like now, how many losing days you normally have in a row, and then break it down accordingly. And take your time with it. Time limits are generally a thing of the past now for funding companies. They used to be like a 30-day time limit, which is super hard. Back in the day, it forced you to flip accounts. But now it's different. There are no time limits. All you have is a monthly rebill. So if you can afford the monthly rebill, just take your time. When I did my first futures funding challenge with Top Step a couple of years ago, it took me 2.5 months until I got funded. I traded it really slow. I was conservative. I didn't go full port. I traded real small amounts, and I brought my way over the line nice and slowly. 2.5 months. Okay, and it might be different for everybody, but at the time, that was my trading skill. That was my trading ability, and it took me 2.5 months, and I did it. So Take your time. If you can afford that monthly rebuild, take your time. Now, the second way, how I now most efficiently pass these evaluations is not for everybody. Probably going to be, some people are going to be in the comments, oh, just gambling, bro. But this is reality. So let me explain this. This is how I basically do all my combines and evaluations now at this point in time, is I go heavy on risk, and I generally try to pass these combines in about 2 days. So again, using the 50K example, I'm spending $49 to set the combine. There's $2,000 worth of drawdown in the account. I'm trying to risk $500 per day and make a 1 to 3 risk reward on that. So I'm aiming for that $1,500, that 50% consistency target in 1 day. So generally, I'm trying to pass these in 1 to 2 days tops. If I blow it out, I'd have to lose 4 trades, or have 4 losing days in a row to blow the account. These days, it's been a long time since I've had 4 losing days in a row these days. So it makes sense for me. And also $49 on a 50K combine is just a drop in my bank account at this point. It actually costs me more to spend more time in a combine. If I'm trading it conservatively, it costs me more just based on my time spent trading, because my hourly worth, those of you guys again familiar with business, you got to value your time at a certain hourly rate based on your income. My hourly rate right now is worth multiples of $49. So I don't want to be spending my time sitting around in simulation in the evaluation stage to get funded, because I'm just burning money at that point. It costs me less if I just go in with $49 and I try and pass that in 2 days, and I get as quick as I can to the funded point to where I can start earning money from that $49 I spent. It takes me a few tries. If I blow out a few evaluations, it's really not costing me anything compared to the time that I'm spending and doing this. So again, that is not financial advice. I don't recommend that for most people, but that's just me being honest with you. That's how I do combines and evaluations these days, as I'm doing it as quick as possible, heavy risk, but according to my stats. I don't have 4 losing days in a row. Haven't had 4 losing days in a row for a long time since I traded ICT stuff. The stats are on my side. I guess sometimes I'm just not disciplined and I actually go over that $500 daily personal loss limit, and that's when I, run into trouble. But again, just my personal preference. I just buy back in and I flip it again. So that's personal preference. That's most efficient for me at the time. You have to decide based on your own financial circumstances and your own trading ability what works best for you. Now, how do you keep an account once funded? The statistics are stacked heavily against you. Most people don't pass these challenges because they're not very good at trading or not good at risk management. And then even when people get funded, a lot of people never make it to payout. It's just a constant doom cycle of getting funded and never getting a payout, because risk management goes out the window once you get funded. Now, here's how I like to break things down once I'm in a funded account, right? So yes, I may flip the combines, I may flip the evaluations quite aggressively, but once in that funded stage, now I'm breaking things down and there's a scaling plan at play. So what I like to do, again, 50K top SIP account as an example, you have $2,000 max drawdown, right? So again, split that up, $2,000. What I like to do is start really, really small. So I make use of micro contracts. I like to risk at most about $100 per day on those 50K accounts in the funded stage. So what does that mean? Risking $100 per day means I'd have to lose 20 days in a row to blow that funded account. That's just statistically not going to happen at this point. So that already sets you up to keeping that funded account. If you know that you don't have 20-day losing streaks, then that's basically secured your funded account and you just take your time growing that. So what I like to do, start with the micros, risk that $100 per day. Then as I build the account and build that drawdown cushion, build it up and up and up over $2,000, $3,000, $4,000, then I start to up the risk a little bit. But I'm always trying to think, how many days would I have to lose in a row with my personal loss limit in order to blow the account? And I just give myself a good buffer. If you got $10,000 profit in the funded account, okay, now I can risk $500 per day, and it'd still take me 20 days to blow the account, 20 losing days to blow the account. And of course, if you're risking 500, the profit potential is much greater too. So you can see how that can quickly scale. But at the very beginning of getting a funded account, you have to size down, you have to be patient, you have to take it slow. If you want to have the best chance of getting a payout, take it slow. The main goal once you get funded, or even with personal capital, should be conserving capital. How long can I keep this? How can I set this up so I can keep this account as long as possible? That should be your main number one priority. Not how much money can I make, but how long can I keep this? Because this is now your asset. This funded account is your asset, right? And you want to take good care of it and make sure that it pays you out in the future so you can get your return on investment on that initial amount spent on the combine and the activation fee. Now, how do you choose a good prop firm? Over the last 6 years, I've tried, you name the prop firm, I've probably tried it, okay? And I've been funded and had payouts with a handful of them as well. Here's my experience on how to choose a good prop firm. Number one, first and foremost, I'm looking at how long have they been in the business. Now, you've got TopStep. TopStep started this online funding industry. TopStep was the first one to do it. They've been in business the longest. They have great history. If you're looking at Forex CFDs, again, I'm not endorsing these guys or promoting with this one in particular. I don't recommend CFDs in Forex trading. Do your own research, but if you are going to look at that, another example of this is FTMO. They've been in business for a long time. They have great history. So that would be something to consider, time in the business and how much experience they have. Secondly, I'm looking at who runs this company? Are they transparent and what's their background? For example, TopStep, Michael Patuk, super transparent. He has his face out there everywhere. He does interviews. He's done interviews. He's active on social media and he's honest about what's going on in the company. When their support sucks, like at the moment, the support's pretty bad. They have acknowledged they're behind in customer service and they're implementing fixes for it, but he acknowledges, hey, we're not doing so great at customer service at the moment. If that bothers you, go somewhere else. I like when the CEO or the people running the company are transparent and honest like this, okay? And that's a huge, huge positive because you want to be selecting these prop firms based on longevity, okay? You don't want to put all this work into getting funded just to have the rug pulled on you later on. So people like TopStep, good example. They've got history, they're transparent, and they conduct themselves honestly. Secondly, look at their experience, okay? The guys who run TopStep, they were actual traders in the Chicago Board of Trade, right? They were trading on the floor. They know this industry. They've had experience, real experience. So that, again, is a huge factor in deciding which funding company to go with. Because if you compare that to what we've seen more recently, we've seen like kids. And again, this is no disrespect to young hustlers out there. I respect the grind. But when it comes to something like this, an industry with a lot of regulations, a lot of gray areas, and a lot of money, frankly, I don't want to be, going for a prop firm where there's like 21, 22-year-old kids who just learned to trade 3 years ago, now opening up a prop firm and marketing the shit out of it, okay? That's not where I want to be trading. That does not seem safe, nor do they have the experience to run a company like this, okay? Running a prop firm, a financial company like this, it's a huge, huge thing to take on. You need experience. You need the legal backup. You need to know the regulations and the laws behind things, and you need to know how to manage the money properly. These kids don't really know how to do it. There's no shade against them. They're just not old enough. They don't have the experience for it. Okay, I wouldn't even open a prop firm. I'm 27. I wouldn't follow. If I'm open to prop firm, I wouldn't join it. Okay, so something to keep in mind there as well. Next, you want to see, are these prop firms paying out their traders, or are they making it difficult to get payouts? If there are a lot of hoops to get through just to get a payout from the hard work you've done, red flag, I'm not interested. You've seen that with companies like Apex at the moment. They're making you jump through hoops, making you send in videos of you trading, and they're denying payouts, okay? And that's not a good sign. That's something I'd want to avoid completely. Whereas a company like TopStep, they're basically paying you out every single time. If you haven't broken any of the funded account rules, you're getting your payout. They have a long history of people getting payouts. You can see that the daily payouts going out in the Discord every single day as well. So look at payouts. How are payouts being handled? Are they being denied? Are there a lot of loopholes, or is it easy to get a payout? Okay, so that's the next thing I'll be looking at. And that's basically it for choosing a good prop firm. Okay, those are the two main things I look for. And again, this may sound biased, but this is the reason why I exclusively at the moment trade with TopStep. My trust is with them. They haven't given me any reason to distrust them. They've been transparent. They got the experience. They got the longevity, and they make payouts easy. So that's why I've been team TopStep for the last couple of years since moving to futures. So that's my thoughts on that. Now, the last thing I've learned, this is like the one I said was a little bit of a secret, okay? It's a bit overlooked by a lot of people, but it's important. This can be a potential edge for you if you're a prop firm trader. So when you look at prop firm evaluation account size, everyone looks at the 50K, 100K, and 150K, and you're like, oh, I want that 150K account size, right? That's the most appealing because it's the bigger number. You're like, oh, I can make the most money from that. Sure, whatever. What you need to do is look at, for each account size, what's the max drawdown? What's the max amount you can lose? And what's the profit target in the combine stage? Okay, so 50K account, right? You have max drawdown of $2,000. Your profit target is $3,000. So Again, your effective account size is $2,000 and you have to make $3,000. So what's that? It's 150% return on the drawdown you have to make in order to pass. Okay, 150%. Now compare it to the 150 account. The $150,000 account, you have max drawdown of $4,500 with a profit target of $9,000. So your effective account size is $4,500. In order to get funded with that, $4,500 times 2 is $9,000. So you have to make 200% in order to pass. So it's not necessarily a good or bad thing, just something to keep in mind. If you want to get funded quicker, those smaller accounts are easier to pass. There's a less amount you need to make in order to pass the account, a less percentage you have to make in order to pass, whereas those bigger accounts are automatically going to be harder and take a longer amount of time because you have to make 200% in total. Okay, now I've got a video breaking down that math more, which I'll link in the description for those of you interested, but it's something I wanted to highlight. Often gets overlooked by a lot of prop firm traders. They see the big number and they just go for the big account. Think about those smaller accounts if you want speed to getting funded and speed to getting paid out. Obviously, you have less drawdown to work with, but if you're a good trader and you break it down like we talked about earlier, shouldn't be too much of a problem. Okay, so just think about that. Anyways, guys, that's what I've learned over the last 6 years from using prop firms so far and spending $10,000 on them. And like I mentioned earlier, my prop firm of choice is Top Step. If you do want to try them out, get funded with them, the link pinned in the comments below will give you 20% off at the checkout. Automatically applies to any combine size. So click that link, accept cookies when you get to the landing page, and then choose your account size. That'll apply at the checkout. So that's who I'm partnered with because of the reasons I talked about earlier. Do your own research, make your own decisions, and I hope the information presented in the video today was helpful and taught you something, or at least gave you some bit of value for your trading journey. Like the video, guys, subscribe, and I'll see you guys in the next one.